The problem with the large language models is they generate the next word probabilistically. They're not going to say, I don't know. They're going to give you an answer. So if you depend on that answer to buy and sell shares, you are likely to lose a lot of your money.
Die Geldmeisterin. Der Finanzpodcast mit Julia Kistner. Hello, Mr. Raghavendra Rau, Professor of Finance at the University of Cambridge. Would you please introduce yourself and your research focus to the podcast audience just briefly?
Right. Thank you very much, Julia. It's a real pleasure to be here. Thank you very much for agreeing to do this. So as you know, my name is Raghavendra Rau, but that's very complicated for most people. So most people call me Raghu, which is nice, short, and easy, right? So you got Raghu Bolognese, you got Raghu, the sauce, so it's very easy. So I'm the Sir Evelyn, the Rothschild-Professor at the University of Cambridge. I'm also the Gresham Professor of Business at Gresham College in London. So over the past 15 years, I have been focusing a lot on how information is used by the markets, by financial intermediaries in order to make decisions. So as part of that, I am also one of the founders and current directors of the Cambridge Center for Alternative Finance, which is a center I set up here at the University of Cambridge, along with two of my colleagues, Bob Wardrop and Brian Zhang. And the objective of the center is to study how technology is changing the world of finance.
And this is also your keynote at Thanksgiving dinner of Invesco, how artificial intelligence will change the asset management. How will it affect the capital market and its different capital market participants in general?
Right. That's exactly what I was planning to talk about. That's a part of how technology is changing finance. I also talk about blockchains. I also talk about, other types of technology innovations. But the most current, as you correctly pointed out, is indeed artificial intelligence. The big development in the artificial intelligence world has been the development of large language models in 2022, and it's one of the fastest. It has had one of the fastest take-ups of any kind of technological innovation, I think, in the past probably 100 years. You have over 100 million people who signed up for ChatGPT within less than a few months of its release. So the question is, how will this affect asset management? Now, there are two parts to this. The field of finance consists of one part, which is about getting information from soft data. So what I mean by soft data is not necessarily the financial statements of the company. That's hard data. But looking at things like, for example, the tone of the voice of the CEO when they're talking about earnings forecasts and so on, or the tone of the management disclosure section or other sections of the financial statements, rather than looking at the numbers themselves, look at how they talk about the numbers. So that's one area where the focus is on how do I get more information from the current financial information available. Mm-hmm. The second part is directly applicable to asset managers like Invesco, like hedge funds, and so on. And their idea is, can I use these numbers, the numbers in the stock prices, to predict future stock prices? Right? Mm-hmm. So in the first case, I'm going to the companies and looking at the data released by the companies and information about the companies to draw inferences on prices. The second one is I'm looking at past prices and trying to predict whether there's a pattern in past prices that predicts future stock prices. Mm-hmm. So that's more a sense of, okay, in the past we have tried linear models, A predicts B using a linear framework, but with AI and with large machine learning models, I can have a complex non-linear model to predict prices based on past information.
if you talk with the researchers, they all say for the data analysis, they already use artificial intelligence. How far are we approached here, you think? And if everybody used the same models, won't this change also the market a lot? And what will this mean for the transparency of the market?
That's a great question, Julia. So I do have to say that, first of all, the large language model is a little bit of a misnomer. The reason is because we don't really know what is going on inside the model. So just by saying if everybody knows the same models doesn't mean you're going to get the same output, even if you give it the same data. So to give you a sense, what a large language model is basically a probabilistic generation machine. So in other words, when you feed in words, it takes that word and gives you the probabilistically most likely next word. And then using that word, it generates the next word and so on. So if you start with a slightly different question, you'll come up with a completely different answer. Mm-hmm. So it's not guaranteed that everybody using the same model will get the same answer because you don't know what is inside a really large machine learning model. It could be anything. And that's one of the major problems I have with this type of research is that it's a lack of explainability. That's one of the big focuses of finance today, is trying to explain what's going on inside the models to get that output. Mm-hmm. And coming to your the other question about market transparency, I see the major focus of understanding what is in the data better. That may be a better use of AI models than trying to use them to predict future numbers. Because at the end of the day, if you don't know the theory, there is no way you can predict what's going to coming out on the other side. Mm-hmm. So my personal sense is the people who are using AI models should summarize information that already exists. That's probably a better bet than using it to actually pick stocks or actually pick things to invest in.
Mm-hmm. Who will then have the most advantages? If I think of this, I would say the one who also develops the model should be also the user of the model and should be also the analyst to get the best achievement out of it.
Well, that's in one sense that's true. But let me give you a counter example.
Yeah.
So Bloomberg set up a specific model only trained on Bloomberg articles. So the idea was that you could query it like a Bloomberg thing. And so, they would basically give you recommendations based on all the information Bloomberg had. Mm-hmm. And it turns out that a general purpose large language model like ChatGPT, which was not trained on Bloomberg data, was more accurate than Bloomberg itself. The reason is it depends on the quantity of data which you put in. And unfortunately, or fortunately, a few companies, OpenAI, but also Anthropic, Gemini, Google, have a big source of advantage because their models already have a huge amount of data and a huge amount of parameters built in. So a general LLM, not trained on finance data, in many cases will do better than a model trained on data, but which is a smaller section of the big population. Mm-hmm. For some reason, LLMs seem to do a lot better if there's a huge amount of data available on which they can form connections.
So size matters and all of that, and what about the quality? Some say it's getting worse and worse because nobody knows where to get the data, and there are coming more and more data of not good quality in the system. So what should we do there?
That is indeed a problem. The problem essentially, you're right. The problem essentially happens because when you start with the initial amount of data, you've pretty much captured everything on the internet. So when you have that and then you clean it up, you've got a database which is several terabytes. It's not huge. It's several terabytes of clean data. And once you've trained it on that, so you know all the connections, where do you get additional data to train it? At the moment, the problem is that you can't scrape it off the internet easily anymore because that's already gone. So there are two approaches. One approach is basically you simulated data. That means, in other words, you generate new data based on the data which is already available and use that as a training input. Now you can see the problem with that. Right? The problem is that if you have this new data coming in, which is based on simulations of the old data, if there are mistakes in the old data, they will be magnified in the simulated data. Right?
Mm-hmm. Okay.
The other approach is to use new types of data. So it's not English, it's not a thing. So you can start moving to multiple languages. That's one.
Mm-hmm.
The other thing is use biometric data or basically non-verbal data. So you can use audio tones, you can use, facial expressions, things like that. But that still has not been mined very well yet. So those are new ways of looking at how do I look at facial expressions and map that to what the person is actually saying. Those are new areas which really haven't been done because right now everyone's focused on the data, which is basically available on the internet.
But who will develop them? Is there not already a very concentration on data centers? And what does this mean again for the capital markets then? And what should I do as a private investor? Can I use it the same way? Or is it like in former days when suddenly it was a question of connection, internet connection to, if you think of the day trading, it depends on how fast you get the connection. And isn't it the same now with these data centers? So if you are not one of these huge companies, you don't have any chance anymore to get into there. And on the other hand, how will the private investors work with this?
Okay, so first of all, the key part is don't depend on AI models to get you an edge in trading because they make up stuff.
Yeah.
Right? So the key part about this is that, I'm talking about two separate groups here. One is the machine learning models, which has been there for a while, right? The computed nonlinear math models. The other one is the large language models, which is what's really taken off in the last few years. The problem with the large language models is as I said, they generate the next word probabilistically. They're not going to say, I don't know. They're going to give you an answer. So if you depend on that answer to buy and sell shares, you are likely to lose a lot of your money. So I'd probably say don't use it. Right? I would say that you can use it to, for example, to summarize a complicated financial statement, to look at, to basically say, what are the major things coming out of this? So they're very good at summarizing stuff. They're very good at eliminating redundancy. So it makes stuff easier to do. So for you, from perspective of you and me, honestly, I don't think it's going to make much of a difference to most of us because as an individual investor, personally, I myself do not invest in individual stocks. It's too dangerous. You can invest in individual stocks, you can make a lot of money, but you can also lose a lot of money. So I personally invest in index ETFs. So big indexes, as big as possible. So I really care more about macroeconomic news than I care about individual stock-specific news. So from our perspective, not a huge difference. From the point of view of the companies, the models are available to everybody. So in other words, OpenAI is making money by licensing out its models. There are also open source models, like Falcon AI is being developed in the Middle East, the UAE, and they are trying to beat the models on OpenAI. And there are a whole number of new techniques being tried with smaller models, which seem to be just as efficient as the larger models. So this is just beginning. I mean, 5 years ago, nobody knew this existed. 3 years ago, nobody knew this thing was there. But now, in the last years, the amount of progress has been phenomenal. You're right. They need enormous amounts of energy. And so that's one of the big constraints right now. They need water, they need energy, right?
So I should go into water and energy stocks.
Energy stocks maybe, probably, right?
Yeah.
But then again, the question is, these guys know that if they use oil, the oil is not going to be very useful for them going forward. So a lot of them, Microsoft, for example, is commissioning the firing up of the nuclear reactors. And so use that energy for that. So those are good development because they're not adding much to the climate.
But won't all this AI focus the investment strategy in the direction of quantitative investing? And do I need a fund manager in the future?
I would probably say you still do at the moment because, again, AI is not trustworthy. You have to. It's good to help you. So I personally, for example, I use it every single day. I use everything. I mean, I have Claude, I have ChatGPT, I have Gemini, Perplexity. I use everything. But I always double check everything they tell me because, again, you cannot trust them completely. They will give you answers because they're trained to give you answers. They're like, in a way, they're like good MBA students. An MBA student will never tell you they don't have the answer. They'll give you an answer. In most cases, the answer will be wrong, but they will give you an answer anyway. So that's how I treat them.
What are the main investors' opportunities and risks of these changes in asset management if you use more AI there?
As an investor, personally, as I said, because I invest in index ETFs, I'm already exposed to these things. But a lot of my students ask me, for example, should I invest in NVIDIA? Should I invest in particular types of companies that are benefiting from this? The answer is those are probably too late because we don't know. The price has gone up so much that we don't, unless there's new information coming out about the types of AI models, there is nothing at the moment you can do. Would you put more money into the tech industry? That's a good question. But the tech industry is already so highly valued that my personal sense is I wouldn't go out of my way to put more money into the tech industry. Maybe it's good. But putting it in the general market will diversify, and it's done extremely well in the past 10 years.
Okay. So what are your focus for 2025 then? Is there already this influence of AI, and where's the market going to?
I don't think the AI part is going to have a huge influence on market prices in 2025. Geopolitical risks are likely to be much, much more important. Right? We have right now the China-US trade, much bigger impact than AI itself. AI is useful, but at the moment, there hasn't been a killer app, sort of like, when railroads were introduced, it took the first railway investors all lost their money. But over time, people learned how to use it, and it would be extremely transformational. The same thing with AI. Right now, the major problem with AI is nobody really knows what's the most efficient way to use AI. So we all are experimenting with this. But we don't know exactly what we're doing. Why are we using AI? We talk about this at the business school here at the Judge too. But we haven't really come up with a killer solution and say, okay, we need to use AI for this. We use AI like you are using it right now for summarizing conversations, right? So I use that in my classes. I summarize my classes. I post a summary to the students. But the students are doing the same thing. They're using AI to summarize the classes and sharing it with each other. So people are experimenting. But there is no way of saying, okay, we know what we would do because it is such a new area.
So if we are still experimenting in the hype cycle, should we wait for investments there?
Well, from you and I perspective, from our perspective, I would probably say, continue experimenting, because by experimenting, you figure out whether it's useful or not. And it's very cheap. I mean, OpenAI costs $20 a month, and so most of these kind of things. So it's extremely cheap, right? So well worth it. And but from the point of view of investing, I would probably say, yeah, you're pretty safe. In the next year or so, I would probably put a bigger emphasis on geopolitical factors, geopolitical risk factors like U.S.-China, U.S. political elections, things like that. I would not put so much thing. I don't think AI is going to have, it'll have an impact, but it won't be gigantic compared to the others. The others are much, much more important, immediate, short term.
At the beginning, you said also something interesting. You said to charge CIO. Do you already use AI to see their faces on the events, or is this just future?
It is probably at the moment there are papers being written which would take videos and analyze the videos for the way the CEO is talking, and use that to infer what is the actual tone the person has. The problem is these papers are at the moment few, simply because the academics running it, they don't have the processing power to look at an entire hour of video. It takes a lot of time and energy to analyze an entire hour of video. So right now what they're doing is focusing on transcripts. So it's not the facial expressions, it's what the CEO said. So it's printed and you can read that and you can check the tone from that. But that's so in the future, I would expect as you go more further is to look at what the person is actually saying, right? When they're saying, are they grimacing? Are they kind of uncomfortable? Can we actually find that? In a way, it's like, can we find a lie detector? I don't know, because we have never been able to do this by human beings. We are very bad at finding lies. Can AI do it? I don't know.
But still, it's very interesting because I always said as an investor, as a human being, I could at least better charge all these soft facts, but this is not true. This is also the AI is developing ways to analyze this too.
Correct. But I do have to emphasize that this is also one of the problems with AI. Again, the problem is a lack of explainability. So in other words, if your AI model tells you this CEO is lying because he said something and the model is wrong, do you sell the shares? I mean, you don't know what's going on inside the model. You have no way of testing whether the model is correct or not. So, what do? Do you say, oh, yeah, the CEO is lying, I'm going to sell the shares? But the CEO is not lying. It just, maybe this morning he had went to the dentist and his face is, he's got pain in his face. Like, we don't know this. So trusting AI is a bigger problem, I think, than the actual use of AI itself. Human beings have a tendency to trust too easily. So the AI model will say, do this. And they'll say, oh, yeah, the model computer is telling me to do this. And they'll go ahead and buy shares. That is a problem.
Yeah. So there are many uncertainties also inside AI, which the market normally doesn't like, the capital market. So what do you think? Does it get more efficient, or will there be false analysis so that the market could get quite volatile?
Right, more volatile. My personal sense is at the moment, the market efficiency just means, does the market take into account all the available information as fast as it can and put it into the stock prices? Right? And that goes back to some of your previous questions. I need to be close to the actual place where information is being produced so that I can analyze that information faster than anybody else. That doesn't hold so much, I think, with AI. With AI, it's more in the sense of, at the moment, you don't quite know whether you can trust it or not. So it's still a lot of false analysis and so on. So it's useful, like having an intern next to you. So you're doing the analysis that will process it faster, but it will not give you an answer. In a way, I would probably say it's like Microsoft Excel in the 1990s. Right? Okay. I mean, it's a good tool, but you're not going to, it will help you be more productive, but it won't help you make a final decision. You still have to make the final decision.
So we need more years, the fund manager who make the final decision.
I think that's absolutely right.
Thank you, Raghavendra Rau. It was very interesting.
Thank you so much for doing this, Julia.
Alles Gesagte ist nur die persönliche Meinung von Julia Kistner und daher keine Anlageempfehlung und keine Rechts- und Steuerberatung. Für Verluste, die aufgrund von getroffenen Aussagen entstehen, übernimmt die Autorin Julia Kistner keine Haftung.